We're back with another swineweb.com market update with Jim Huang. Welcome, Jim.
Nice to be here.
So in your latest commentary, can you talk to me about your latest idea about shorting the hog margin?
Yes. As we know, the cash hog price is flying high this day. Today, the Iowa-based average $127 per hundredweight, up 20% year over year and up 70% from the 5-year average. However, the futures market indicate that pork price may be trending down. The CME August lean hog contract is quoted at 120, already at a discount. And the October is even lower at $98, and the December is only $89 per hundredweight. So right now the hog margin is about $20 per hog. I expect it to fall below zero next year. Pork price will be falling faster than corn and soybean. Both are falling, but it's falling faster than ingredient. Hyperinflation had cut deeply into Americans' budget. Pork demand will be shrinking because of substitution effect, kind of like moving into lower price protein like chicken. Another thing is China is not buying. Pork import will be 60% less than last year. 2 years ago, it's importing 4.4 million ton of pork from all over the world. Now it's probably only 1 million ton. So this is my theory behind shorting the hog margin too.
So you have 10 total articles now on TradingView. What is the overall synopsis?
Okay, so actually, I had a partnership with the CME Group. People know that I used to be an employee with CME Group. Now I'm a consultant with them as well. So I began publishing on TradingView, which is a social investment platform with about 30 million people. So I start publishing in June. So it's my intention to cover all the commodity category traded on CME. There are 7 categories, which are agriculture, energy, metal, interest rate, equity index, foreign exchange, and cryptocurrency. So far, for the last 2 months, I have 4 writings on agricultural commodity and 1 of each for the other 6 categories. Overall, my view, I had actually a very negative view on global economy, at least for short term. There is heightened geopolitical risk from the Russia-Ukraine war to now a possible conflict in Taiwan. US and Europe are experiencing the highest inflation in 4 decades. So the risk of global recession are very high. So this day, the most common use type of trade I have right now is outright short future or short spread trade or put option. Jim.
Okay, now to end, can you touch on the cost of the Fed rate hikes to farms and meat packers, the impact of inflation, particularly energy costs to agribusiness?
Yes. The Fed raised interest rate 4 times already this year, from basically a 0 interest rate to 2.25% in July. By year end, there will be another at least 2 more interest rate high. Interest rate will be at least 3% higher than last year. Farm and meat packer who had a credit line with a bank will pay a lot more in borrowing costs. If you had $100,000 loan, interest rate payment will be $3,000 more than last year. Gasoline price reached all-time high in June. Although it come down quite a bit, it is still 30% higher than last year, more than twice the price in 2020. Agribusiness need energy to produce, process, and ship their product. So higher energy cost is like a tax on each stage of these processes. The tax eventually pass on to consumer in the form of higher price. So American household already pay more for gasoline and food. With higher interest rate, They will also pay more on mortgage, car payment, and credit card payment. And actually, today we had a very strong non-farm payroll. So we had 528,000 more jobs created in July. So this almost guarantee next month the Fed will raise in a big way, probably another 75 basis points. So the interest rate will be much higher. They're not going to slow down. So we already seeing the effect. First is less driving during peak summer hour. Both not only the gasoline is high, also the diesel are pretty high. So not only the consumer driving, but also the shipping, because a lot of truck use diesel. So a lot of shipping actually also down as well. And then people, we have already seen the impact of people downgrading their purchase. They're going to the grocery store, supermarket less, and they're also switching to lower cost substitute and also generic product. Jim.
Well, market analyst Jim Huang, thank you for joining us.
Thank you very much.